Ever wondered how to navigate the tricky waters of small business finances? Small businesses often face a myriad of financial challenges. From cash flow issues to managing debt, the financial health of your business is a balancing act that requires constant attention. One of the most critical aspects of this is dealing with accounts receivable and payable. These are the money owed to you by customers and the money you owe to suppliers respectively. Managing these accounts with precision is vital to maintaining a healthy cash flow. If you don't keep a close eye on them, you could find yourself in a financial pickle. Moreover, maintaining up-to-date records is not just good practice, it's essential for tax purposes and for monitoring the financial growth of your business. Understanding and managing your finances are key to your business's success. So, let's dive into the basics of accounts receivable and payable. In the next scene, we will begin by breaking down the concept of accounts receivable. Tune in. So what exactly is accounts receivable? Well, in the simplest terms, it's money owed to a business by its customers. You've provided a product or a service, and now you're waiting for payment. That invoice you've sent? It's a promise of payment, and it's now part of your accounts receivable. Think of it as a ledger of IOUs from your customers. They've received the value you provide, and in return, they owe you money. This is an essential part of your business's cash flow, and managing it well can mean the difference between a thriving business and one that's struggling to keep the lights on. Accounts receivable is essentially a record of sales that have not yet been paid in cash. It represents a line of credit that the company has extended to its customer and are considered a part of a company's current assets. But it's not just about tracking who owes you what, it's also about when they're due to pay you back. Some might be due immediately, others in 30 days, some even longer, and that's where things can get tricky. Accurate recording of these transactions is vital. It's not just for your sanity, but for your bottom line. It helps you understand your business's financial health and aids in making informed decisions. Now that you understand what accounts receivable is, let's talk about how to manage them effectively. Managing accounts receivable is a critical part of your business's financial health. Let's walk through it. It starts with timely invoicing. The sooner you invoice, the sooner you're likely to be paid. It's simple, but it's often overlooked. Next, keeping accurate records is key. This involves diligently tracking all your sales, payments received, and overdue balances. You might wonder why this is so important. Well, it's because it helps you stay on top of your cash flow and identify any potential issues early on. But what if a payment is overdue? That's when the third step comes in, following up. A gentle reminder can go a long way in nudging your customers to settle their bills. And remember, the longer a bill remains unpaid, the harder it becomes to collect. By managing your accounts receivable effectively, you can improve your business's cash flow. But what about the money your business owes? That's where accounts payable comes in. Just as important as the money coming in is the money going out. That's what we call accounts payable. Imagine accounts payable as the bloodline of your business, keeping it alive and functioning. It's the money you owe to your suppliers for goods or services purchased on credit. It's an important part of managing your cash flow, as it reflects the amount you need to pay out in the near future. The concept is simple, but the management is where the real challenge lies. You've got to ensure timely payments, avoid late fees, and maintain good relationships with your suppliers. Each missed or late payment can strain these relationships and potentially disrupt your supply chain. So how do you manage it effectively? Firstly, keep your record-keeping impeccable. A well-maintained ledger will give you a clear picture of your financial obligations. It will help you track due dates, amounts, and suppliers, so you can plan your cash flow accordingly. Secondly, consider computerizing your accounts payable process. With the help of technology, you can automate payments, set reminders for due dates, and quickly generate reports. A good computerized checks and balance flow sheet can not only save you time, but also eliminate human error. But remember, technology is a tool, not a substitute for understanding. You need to stay on top of your payable accounts, understand the terms of your supplier contracts, and negotiate better conditions where possible. Now, you might be thinking, why is accounts payable so important? Well, effectively managing your accounts payable helps you maintain a positive cash flow, build a good credit rating, and foster strong relationships with your suppliers. It's a key part of ensuring financial health and stability for your business. Remember, running a business isn't just about making money, it's about managing it wisely, and that includes keeping a close eye on your accounts payable. By keeping a close eye on your accounts payable, you can ensure your business stays financially healthy. Keeping accurate and up-to-date records is not just a good business practice, it's a necessity. The significance of this cannot be overstated, especially when it comes to taxes and financial planning. Picture this: tax season arrives and you're scrambling to find receipts, invoices, and ledger logs. Doesn't sound like fun, does it? And that's where good record keeping saves the day. It ensures that you have all the necessary information at your fingertips, making tax filing a breeze rather than a hurricane. But here's the kicker: paper can fade and receipts can be lost. Relying solely on physical documentation can be a risky business indeed. This is why moving to digital record keeping is such a game changer. It's secure, efficient, and let's face it, a lot less cluttered, and the benefits don't stop at tax time. Good record keeping provides a clear picture of your financial situation, helping you make informed decisions about your business. It's like having a roadmap to your business financial health, showing you where you've been, where you are, and where you're going. Now, this might sound daunting, especially if you're new to running a business. But don't worry, there are plenty of resources out there designed to help you navigate the world of finance. From digital bookkeeping tools to financial advisors, help is just a click or a call away. Remember, good financial management is the backbone of any successful business. So keep those records up to date, manage your accounts effectively, and watch your business thrive.